I think the problem is bigger than FTX. And I'll say the uncomfortable part out loud, and nobody needs to necessarily comment if you don't want to. But there were an enormous number of venture firms that talked their way into just completely doing zero work here. I mean, and the tip of the spear is this thing. Who's the guy that works at Founders Fund? Zebuljar? Delian, thank you. Yeah. That tweet that he had where he basically took the snapshot of the Sequoia transcript was one of the funniest things that I've ever seen. I mean, this was a $215 million decision, and Sequoia documented it and put it on their own website. And I think that's an example of something that was happening, which is people just looked the other way and didn't even want to do the layer of work.
Chamath, let me just string together a couple of things we've talked about over the past few episodes. And I think you'll agree with this point, but generally speaking, there seems to be a very heavy lack of governance in investing, given the amount of capital and the velocity of capital in Silicon Valley, particularly in private markets of late. And a lot of the stuff that's been talked about, where last week we talked about super voting shares and the founder does whatever they want and there's no governance and there's no board and there's no oversight. And particularly with this FTX situation, where clearly there wasn't a board that was, getting the necessary information, that had the necessary influence, that had the necessary controls, the meta conversation. But all of these threads tie together the concept that maybe there's not a lot of governance and not a lot of diligence going on. And the amount of money that's flowed into Silicon Valley has allowed a lot of this loosey-goosey behavior. And
I agree with you.
Consequence of it.
Let's thank Brian Armstrong for joining us. I know it was a very busy day, and what a great, candid, insightful.
Thanks, Brian.
Thank you, Brian.
Thanks,
Thank you.
Candid and insightful. Finish with Chamath.
I just want to say the second uncomfortable thing out loud, which is there was a lot of venture firms in Silicon Valley in this period of both not doing any work or diligence, who also took the extra step and actually created classes and would teach teams how to create these tokens. Okay, and those artifacts, those video links and artifacts are sometimes on their website. They're still on YouTube. They're inside of Twitter. And what these folks would do, and we talked about this, the game that they played was they would get a team, they would create a token, they would also buy equity at some crazy valuation. The equity was locked up, but the tokens were not. And then they would put them on an exchange and sell them to unsuspecting people, and they would be able to dump these tokens. And if you look inside of that trend, what you're going to see, and Brian just mentioned this, those were the sale of securities, except it was done in a completely unregulated way. So if the SEC is really, and the DOJ is really going to take this FTT token issue seriously and what happened to FTX, they're going to start to look at a bunch of other tokens and token sales, and you're going to end up looking at some very well-known venture firms inside of Silicon Valley.
This is going to be super gnarly, and we talked about it before on this pod. There are people who knew better. So you get a bunch of kids who are living in the Bahamas in a house, and they're, winging this thing. That's one level of responsibility, and they'll go to jail. But when we talk about venture capitalists, capital allocators who've been at it for decades, to Chamath's point, and they're teaching people how to do this, and they're hiring attorneys and creating offshore Panama, BVI, whatever, places to put these coins, and then teaching people how to do it, and then flipping them potentially. We're just peeling back the onion on this. I have a feeling that this is going to be the turning point in all of this.
That token, guys, let's be honest, is not the only token that has been engineered by Silicon Valley venture firms. And it is also not the only token that's gone to zero that was engineered by Silicon Valley venture firms.
Well, I mean, who knows engineered by, but yeah, adjacent to at the very least.
No, Jason, there's videos today on some of the most well-known venture firm sites on how to do this.
Oh, wow. I'm going to have to see those. Yeah. So they're basically, your point, Chamath, is they're instructing people on how to do this. And that is a level of culpability.
It's what they did.
Can I ask your guys a point of view on just one big macro philosophical question? I'm obviously not big in the crypto world and haven't been, but so much of the positioning has been that these networks get decentralized through the cryptographic verification systems that obviously enable them to operate effectively and truthfully and correctly and without centralized control or manipulation. But ultimately, while these networks themselves may be decentralized, the user's point of access often ends up being centralized as a point on the network. And it is that point on the network that accrues the same level of influence, power, control, and value as what we saw in the prior centralized network model. We had Balaji on last year, and I tried to get to this point with him. We had to cut the conversation short, but I've still not heard from anyone. And I've spoken with Brian separately about this point. And the concept I use is like, look, media. If you put all the YouTube videos on a decentralized network and anyone can access them and they're distributed everywhere, you still need to have a really good application. And whoever makes the best application is going to get all the usage. And then all the users will use that application, and that becomes effectively the point of control and influence and value once again. And so it seems to me like in this case, the exchange was being used as a centralized wallet. Certainly you can do exchange through the exchange, but mechanistically these guys were storing their coins, their cryptocurrency inside of FTX's wallets. And so FTX had control over their assets. And so the network centralized. And so does the decentralized model, it's a question I'd love to just ask you guys your point of view on. Does this decentralized model actually ever manifest where everyone has their own wallet? And I know there's all these new protocols and these distributed wallets and DeFi things, but
I don't know enough.
Yeah.
I don't know
That would be
enough.
certainly better
but
than centralized.
This points out to me, just you basically recreated an exchange without a regulator. And of course, someone ripped you off and it blew up. How's it any different than what we had in version 1.0? And is there really a model where decentralized works, or ultimately, because of the network effect and the economy of scale? Okay,
Chamath, answer. Yeah, Chamath, answer. Yeah. All right, we got the question. Yeah. Go, Chamath.
No, I mean, I don't know the answer to Freebird's question because I don't know this space well enough. I mean, my biggest purchase ever was Bitcoin in 2011. I've bought a bunch of these tokens that have massively depreciated in value. I think lots of investors have. I kind of fell into it as well. I thought, wow, this is incredible. I get to buy these tokens. They do all of this cool stuff. They represent all this value. And my experience has been the opposite of that. I've lost a lot of money in these things. And so, I really hope that regulators, not just obviously, I hope that regulators do the best they can to get investors' money back in FTX. But I really also hope they figure out all these other tokens as well, because you can just rank them in terms of market cap, start at the top and work your way down. And you will see that these were unregulated securities, Jason, that were manufactured and sold by our brethren.
People who understand the law around accredited investors and the stuff very well.
Yeah.
They understand it implicitly.
Do you guys think crypto investing is dead, or what do you think? How do you think people think about that risk profile now inside of?
I think investing in the tokens is going to end. Investing in the corporation is going to begin, and any of the tokens are going to be super regulated. Building on what you said, Chamath, about the ultimate bet, is it possible that Alameda, the trading hedge fund, was looking at the FTX data, which they had insights into, and essentially that's the same as seeing the whole cards in the ultimate bet. And so they're making their trades based on what they see the consumers are making their trades, front-running their trades or otherwise.
That's not illegal. Citadel does this in the regulated market. That's what payment for order flow is. It's the ability to front-run retail volume. And so, in dark pools, that is legal by the law in the United States. And that's what allows Citadel and, I think Jane Street and Susquehanna, all these folks basically run these dark pool exchanges for regulated securities like options and bonds and stocks, and they get this order flow and they front run it by a millisecond, and they just take small vig. Okay?
But they can't print the FTT tokens and otherwise manipulate the market to the level that I think SBF could.
I just think that there's these really strict walls and segregation, as you heard Brian talk about, when you have those businesses in these regulated markets. The problem here is that this is totally
Wild West. Unregulated,
wild west. So who knows what's going on, really?
And we're pushing the business, Sachs, off of the shores of the United States. As you said, 95% of this is happening offshore. What do you think should happen regulatory-wise, Sachs, in terms of America and competitiveness? Or do we need to be competitive in this?
No, I think we should be. I mean, what if crypto and DeFi is the future of finance? I mean, it's an important technology that I think we should enable through some sort of constructive regulatory framework. I think
where would that start?
I think the regulators should listen to Brian and help come up with the appropriate framework. But to be clear, look, what Sam did is way worse than people going on an exchange and speculating. I mean, look, I think that people who speculated in the buying and selling of these tokens, they were using it like a casino. Okay. Like that's different than a customer putting their money on FTX and having their money get stolen. That's a big difference. So I think there's levels here. Now, Chamath, to your point about who's minting these tokens, you're right. Maybe that's like another category. But I do think that the reason why this is on a different level is because it wasn't Sam's money to give away.
There is such an easy solution to this regulatory environment.
I agree with you on that point, but I think don't underplay when there's an organized process to create an illegal security with special rules for them that allows the liquidity for one class of asset and not liquidity for others.
You're right. So that's a separate bucket. I don't think it's the same as what Sam did. And I don't think it's the same.
I agree. I'm saying
different types of grift.
That's something that needs to be looked at, and we need a constructive regulatory framework for that.
There is such a simple silver bullet for all of this, which is these things there needs to be proper governance. People have to have skin in the game, insurance, people signing off on the taxes, boards, onshore here in the United States. And then we need to have, and I'll keep saying this, a way for Americans to become sophisticated investors. Only 6% of this country fall into the qualified purchaser and accredited. If you want to trade in these things, or you want to trade in NFTs or private companies, we should have a driver's license-like test, a firearm-like test,
you and I are on the same
make a
side
sophisticated test and let people opt into it with an education.
The problem is when you have guys like this, it sets that desire back by a decade, if not more. Okay,
that really sucks. I agree.
Because
so frustrating.
Every single person inside of Washington right now who's anywhere near this from a regulatory perspective or a policy perspective is meeting on Monday morning. Yep. And the meeting topic is, how do we defend the mom and pop folks that lost money here?
Yes.
That's the only thing. So we took this out of, because I remember I texted into the group chat, hey guys, what do we think the legal ramifications are that drive prosecution? And one of our friends said, legal ramifications? These are political ramifications.
Yeah.
Which means that this is going to go to the utmost level and it's going to have the most scrutiny and they're going to act really quickly. They're
going to drop the hammer instead of having a path to accreditation. I agree with you. They're going to drop the hammer because their constituents, some grandma and grandpa, or some people put their college education to this and lost everything. We just need a test. Let people prove they're sophisticated and let them participate if they get a license.
JCal, haven't you been a proponent for letting people invest in startups that are just mom and pops and democratizing access?
I'm only allowed to do that with accredited investors. I would like there to be a test. And I actually teach a course, Angel University, 6 times a year for charity. I do it for charity. It's a 4-hour course where you learn about diversification. You learn about the asset class. You learn about 70, 80% go to zero. We teach you about the power law. I try to teach people about this stuff so that they can participate intelligently. It would be the equivalent, Freeberg, and thank you for asking the question. It would be equivalent if we had a poker test, and to play in the World Series of Poker, you had to go to a 5-hour seminar and you had to take a practical test and you had to say, a flush beats a straight. And you had to just prove that you had some level of knowledge of how to play the game. It's such an obvious path to removing these problems while staying competitive as a country. And instead, we're letting people do this offshore like CZ with no rules or whatever rules he chooses. It's just infuriating. It's so stupid. Our politicians in Washington are so dumb.
Can I just say something? I think the challenge is there's always a spectrum of understanding, and you'll always end up seeing the people on the wrong end of the spectrum getting taken advantage of. There's this notion of adverse selection. Distributions are not equal. People will end up, kind of opting in to spend money on things or making investments that they think are good investments, but they're actually getting taken advantage of because they're not savvy enough, or they miss an important angle or important perspective about the person or the thing that they're giving their money to. Yeah. And there will always be some number of those. And the way that regulation has worked historically is not by first saying, hey, let's figure out the right way to create a framework for operating. It's that some sort of people got advantaged. That story then becomes the regulatory framework. And that story has repeated itself for 500 years across capital markets.
We're talking about a multi-layered thing here. We want to see crypto have a framework. We want it to blossom here in the United States. And then there's multiple level of people who are causing chaos in this ecosystem, in this very promising technology with their goddamn grifts, whether it's VCs grifting or SBF or incompetence. We just need to clean this framework up. If people, sometimes people I understand in DC listen to this podcast, if they're listening, it's essential that America be competitive here. It's essential that everybody participate in risk capital and get educated. Let's clean it up and make a framework that allows all Americans to participate and educates them and then stops these grifters from doing stupid things. If people were educated, that's the first step, and it's the best step.
Should we talk about the economy?